Look at this man, Kevin O'Leary, Mr. Wonderful. For a decade, he's been telling you that your 5 latte is the reason you aren't a millionaire. He's told you to bring your lunch to work in a paper bag and save your pennies. But I'm going to tell you something brutal in 2026. That advice isn't just outdated, it is actually dangerous. Saving pennies won't make you rich when the currency is devaluing at a rate that outpaces your ability to hoard it. If you're still broke, it isn't the coffee. It isn't the Netflix subscription, it's your strategy. The math of 1995 is dead. The middle class dream of 2010 is a ghost. We are entering a year where the gap between the haves and the have-nots isn't a crack anymore. It's a canyon. Here is the reality of 2026. You cannot save your way out of a systematic deletion. When inflation is structural and the cost of housing is decoupled from reality, skipping a latte is like trying to put out a forest fire with a water pistol. It's a distraction designed to make you feel responsible for a game that was rigged before you even sat down at the table. But there is a way out. While the middle class is being erased, a new class of microcapitalists is rising. They aren't saving pennies. They are deploying capital with surgical precision. They know that in 2026, knowing where to deploy your first $100 is worth more than a 4-year degree. If you have $100 to your name, you have a seat. But if you plant it in a 0.5% savings account, you're letting it rot. Today, I'm going to show you the brutal data-driven blueprint to flip that $100 into a fortune by leveraging the specific economic anomalies of 2026. Forget the coffee, forget the old rules. This is the 2026 survival plan. And it starts with the death of your middle-class mindset. We are going to look at the debanking of the average worker, the AI-driven wage collapse, and the specific sectors where $100 can actually buy you a seat at the table. If you want to stay on the right side of this wealth gap, pay attention, because the deletion has already started. And by the end of this video, you'll be the one holding the eraser. The traditional path is a trap. The 40-year career is a myth. And the idea that hard work alone creates wealth is a lie told to keep you on the treadmill. In 2026, wealth is no longer about how hard you work. It's about how hard your capital works while you sleep. If you aren't ready to pivot, you are already being deleted. Let's get to work. The problem with taking advice from a billionaire like Kevin O'Leary isn't that he's wrong about the math. It's that he's speaking from a mountaintop to people stuck in the valley. When a man worth $400 million tells you to stop buying coffee, he is preaching a scarcity mindset to a demographic that is already starving for opportunity. Here's the mistake you're seeing on every financial thumbnail. The belief that being cheap is the same thing as being an investor. It isn't. In 2026, being cheap is actually an active way to lose money. If you take that $100 you saved by skipping lays, and you put it in a physical jar or a standard checking account, you are effectively burning it. By December 2026, the purchasing power of that $100 will have shrunk significantly. Inflation isn't just a headline, it's a tax on the stagnant. The rich do not just save, they multiply. They understand that money is a tool, not a trophy to be hidden away. O'Leary's advice is built for someone who already has a massive capital base, someone for whom saving is just about trimming the edges of an empire. But for you, for the person trying to escape the deletion of the middle class, saving pennies creates a psychological trap. It makes you focus on contraction when you should be focusing on expansion. When you focus on not spending $5, your brain is occupied with the logistics of poverty. You are training your mind to see the world through the lens of not enough. Meanwhile, the 1% are looking at that same $100 and asking, how can I use this to control an asset? How can I use this to buy a tool that automates my income? In 2026, the scarcity trap is the most dangerous place to be. If you are terrified of spending, you will be terrified of investing. You will hold on to your devaluing cash until it's worthless, while the window of opportunity for the Great Reset slams shut. The middle class is being deleted because they are playing defense. They are trying to protect what they have left. But you cannot win a game by only playing defense. The strategy for 2026 isn't about giving up your life. It's about reallocating your energy. Stop counting the cents and start counting the multiples. If you aren't looking for ways to turn $100 into $1,000 using the lever of AI, fractional ownership or high-yield T-bills, you are essentially waiting for the system to swallow you whole. Kevin O'Leary's advice will keep you from going broke, but it will never ever make you rich. And in the 2026 economy, if you aren't getting richer, you are getting poorer. There is no middle ground left. The single biggest lie you've been sold is that you need a massive pile of capital to start playing the game. You're sitting there, waiting for a windfall, waiting for a promotion, or waiting for the right time to start. But while you wait for enough money, the window of 2026 is closing. The difference between the person who gets deleted and the person who thrives isn't the size of their bank account. It's the direction of their cash flow. Let's look at the brutal anatomy of a $100 bill. The Garib, the poor mindset, takes that $100 and immediately looks for a way to signal status they haven't earned. They go out and buy a pair of shoes. In their head, they've treated themselves. But the reality is a mathematical tragedy. The moment those shoes hit the pavement, they lose 30% of their value. In 2 years, those shoes are worn out of style, and worth maybe $10 at a thrift store. That $100 didn't just disappear. It was a voluntary transfer of wealth from someone who has nothing to a corporation that has everything. You didn't buy shoes, you bought a liability that depreciates while you sleep. Now look at the Emir, the rich mindset. When they hold that same $100, they don't see a consumer product. They see a soldier. They ask, where can I send this soldier so he brings back 10 more? They take that $100 and they buy an asset. Maybe it's a fractional share of a high-growth AI infrastructure fund. Maybe it's a subscription to a specialized software tool that allows them to automate a service they can sell for $500. Maybe it's a high-yield T-bill that pays them a guaranteed return, while the rest of the world is losing money to inflation. In 2 years, that $100 hasn't shriveled into $10. It has grown, it has paid dividends, it has multiplied. The mistake you are making right now is the waiting trap. You think $100 is too small to matter. You think, what's the point of investing $100? It'll only make me a few dollars. That is the poor mindset speaking. The point isn't the immediate profit, the point is the behavioral shift. In the 2026 economy, the middle class is being deleted because they have spent decades accumulating stuff that has zero resale value and zero income potential. They have houses full of gadgets, closets full of fast fashion, and driveways full of depreciating steel all, while their real net worth is plummeting. They are high-income poor. They make $100,000 a year, but own nothing that pays them back. If you have $100 right now, you have enough to enter the arena. The rich don't wait for enough to start. They use whatever they have to create enough. If you keep waiting for $10,000 or $50,000 to start investing, you are choosing to stay on the sidelines while the 1% buys up the world at a discount. By the time you think you're ready, the prices will have doubled and the barriers to entry will have tripled. Stop buying things that eat. Start buying things that feed you. The deletion is coming for the consumers. The survival plan is only for the owners. Whether you are Garib or Emir in 2026 has nothing to do with your salary. It has everything to do with whether your $100 is buying you a pair of shoes or a piece of the future. You don't need a fortune to start, but you do need to start if you ever want a fortune. So you have $100. Most people see a nice dinner out. I see the blueprint for your 2026 escape. If you follow the traditional advice of just save it, you are essentially handing your money over to the furnace of inflation. In the 2026 economy, $100 isn't a safety net. It's a high-velocity projectile that you need to aim at the right targets. This is the $100 protocol. We are going to split this bill into 3 distinct tranches: the safe base, the future ownership tier, and the skill multiplier. Phase 1, the $40 safe base, the anti-deletion fund, the first $40 goes directly into a total stock market ETF like VTI or an S&P 500 index fund like VO. Why? Because this is your anchor. While individual companies might rise and fall in the 2026 volatility, the top 500 companies in the U.S. represent the collective productive output of the modern world. 6. The S&P 500 is no longer just a stock index. It is a collection of the most powerful AI-integrated entities on the planet. By putting $40 here, you are betting on the house. You are ensuring that even if the rest of your strategy is aggressive, you have a stake in the Great Reset winners. This isn't about getting rich tomorrow. It's about making sure your $40 doesn't turn into $20 worth of purchasing power by next Christmas. This is your insurance policy against the deletion of the dollar. Phase 2, the $30 tech AI pivot, the ownership stake. The next $30 is for growth. In 2026, the wealth gap is being driven by those who own the computronium, the chips, the data centers, and the models. You don't need $1,000 to own a piece of NVIDIA, Microsoft, or the emerging 2026 AI infrastructure leaders. You use fractional shares. Put that $30 into companies building the physical AI world. We're talking about firms providing the energy grid for data centers or the semiconductors that run the agents. If you aren't an owner of the technology that is replacing your job, you are the victim of it. By 2026, analysts expect AI capital expenditure to exceed $500 billion. That is a massive river of money. This $30 is your bucket. Even a small stake in the winners of the agentic era can provide the asymmetric returns that safe investments never will. You aren't trading these stocks, you are accumulating equity in the future. Phase 3, the $30 self-education, the skill multiplier. This is the part everyone skips, and it's why everyone fails. The best ROI in 2026 isn't in a ticker symbol, it's in your own human capital. If you spend $100 on stocks, you might make 10%. If you spend $30 on a specialized tool or a high-level technical book, you can increase your earning power by 1,000%. In 2026, the most valuable skill isn't coding, it's AI orchestration. Spend that $30 on a subscription to a premium AI developer tool, a specialized prompt engineering masterclass, or a book like The Wealth of Agents that explains how to manage autonomous workflows. Think about it. If that $30 teaches you how to automate one task for a client that saves them 10 hours a week, you can charge $500 for that solution. That is a 16 times return on your investment in a single month. The middle class is being deleted because their skills are static in a dynamic world. By spending this $30 on yourself, you are making yourself undeletable. You are becoming the person who manages the machines rather than the person being replaced by them. The 2026 reality check this $100 split. $40 in the base, $30 in the future, and $30 in yourself is the only way to play the 2026 economy. If you just save, you lose. If you just gamble, you lose. But if you reallocate based on this blueprint, you are building a diversified fortress. The deletion is designed to catch people who are standing still. By deploying this $100 today, you are officially in motion. You have shifted from a consumer to a capitalist. And in 2026, that is the only move that matters. If you want to survive the 2026 deletion, you have to stop acting like a consumer and start acting like a fortress. Most people will fail this year because they are addicted to the signals of wealth rather than the substance of it. If you want to hold the eraser while everyone else is being rubbed out, there are 3 specific things you must absolutely not buy in 2026. 1, fast fashion and hype apparel in 2026. The global fashion industry is hitting a wall. We are seeing ultra-fast fashion platforms flood the market with garments designed to fall apart after 3 wears. When you spend $100 on a trending outfit or a hype brand, you aren't making an investment. You are performing a voluntary wealth transfer. By the time you leave the store, that clothing has lost 50% of its value. Within 6 months, it's worth $0. The middle class is being deleted because they are drowning in disposable luxury. In 2026, the rich are moving toward quality at value and durability. If your clothes don't have a resale market or a 10-year lifespan, you are burning your capital to look rich while getting poorer. 2. New cars on high-interest debt. The interest trap of 2026 is brutal. While the Federal Reserve has teased rate cuts, auto loan rates for most people are still hovering at levels that turn a $40,000 car into a $60,000 nightmare over 5 years. A new car is a depreciating asset wrapped in a high-interest liability. The second you drive it off the lot, you are underwater, meaning you owe more than the car is worth. In an economy where layoffs are being driven by AI optimization taking on a $700 monthly payment is financial suicide. The rich buy 3-year-old vehicles in cash or at low rates. The Garib mindset buys the 2020 6 model on a 72-month loan to impress people at stoplights who don't even know their name. Get rich quick meme coins and utility-less crypto. 2026 is the year of crypto Darwinism. The era of to the moon on a dog-themed coin is over. With over 1,000 new coins launching weekly, the vast majority are rug pulls or honeypots designed to siphon liquidity from the desperate. If a digital asset doesn't have a clear utility like solving a real-world data problem or powering an AI network, it is a gambling chip, not an investment. The middle class is being deleted because they are looking for a lottery ticket to save them from a broken system. Don't be the exit liquidity for a developer in a different time zone. If you have $100, don't throw it at a moonshot. Put it into the $100 protocol we discussed. The deletion thrives on your desire for instant gratification. If you can say no to these 3 traps, you are already ahead of 90% of the population. 2026 is going to be the year of the smart investor, but more importantly, it's going to be the year of the decisive investor. The deletion isn't a single event. It's a slow, quiet process that happens to people who are too distracted by lats and saving tips to see the tectonic plates shifting beneath them. Don't listen to the billionaires who forgot what it's like to have nothing. They are playing a different game on a different court. When they tell you to frugal your way to wealth, they are ignoring the fact that the cost of entry for the future is rising every single day. You don't need $1 million to avoid being deleted. You just need the courage to stop being a spectator and start being an owner. The $100 protocol we discussed, $40 in the base, $30 in the tech pivot, and $30 in yourself isn't just a suggestion. It is a survival mandate for the mid-2020s. This is how you build a fortress. This is how you ensure that when the great reset of the middle class is complete, you are the one holding the assets that everyone else is scrambling to rent. The era of the average life is over. You are either moving up or you are being moved out. But you have the blueprint. You have the $100. And now, you have the strategy. Here's my challenge to you. Comment start below if you are committed to deploying your first $100 this month. I want to see how many of you are actually ready to stop the deletion and start the expansion. When you comment, you aren't just engaging with a video, you are making a public contract with your future self. And if you want to stay ahead of the curve, hit that subscribe button. We are tracking the 2026 data, the AI wage shifts, and the asset reallocation moves every single week. This is your 2026 survival plan. Don't let the algorithm delete your future. Stay sharp, stay aggressive, and let's get to work.